Hello guys, welcome to the Train Parrot. Today we are the CPI report is going live, so we are expecting to see a lot of volatility. How is everybody doing? I understand that normally I don't do live streams at this time. Many of you probably in America are just waking up, and since we are a few minutes away to the CPI report and I have so much information I want to share before the report goes live, the quickest way to share this with you so you are better informed for all that volatility that we are expecting is just to go live, and that is what I think is going to help us better to trade today. If you appreciate the information, time sensitive, make sure you hit the like, write a comment, and subscribe to the channel. So let's get started as soon as possible because we only have a few minutes to the CPI report, and I really want to be sharing with you the information I found crucial to decide what are we going to be doing. Let me go full screen. We're full screen now. So you can see that Bitcoin is pretty flat. And that means that we are waiting for a squeeze, okay? I'll be showing you all the data I have about a potential short squeeze to the upside. I'm going to show you targets. I'm going to show you where is the liquidity right now. But I need to be very quick because as I'm speaking, that volatility might get taken and then you're going to miss potentially an opportunity. Many of you are looking for an exit from the market, and many of you are thinking whether to sell now or to wait something and stuff like that. So I'm going to try to give you the information. Of course, none of the information here is going to be financial advice, but you can see Bitcoin is extremely flat right now. So it hasn't moved because it's waiting for a signal. It's waiting for the CPI, for the outcome. And let's see how is the market today. So we can see some green, some red. At the top, we have Terra. What is Terra doing at the top one of the old rank? The report is in a few minutes, 17 minutes from now. You can see that the next upcoming Fed meeting in June, the expectation is no change, 80%. So after the CPI is out, this might completely flip, especially if the inflation is above 5% or below 5%, anything that is different from the expectation. The expectation is 5%. And you can see here the chart of the CPI in the previous years, how it's coming now down to 5. So anything like 4.8 is going to have implications because the market is pricing in no change in terms of no change. I mean, no change in the CPI, in the inflation, so staying at 5%. So if we see in less than half an hour of 5.2, people are going to think, okay, inflation is coming back up, so we're going to get higher interest rates, and obviously that's not good for markets, and markets might dump. If it's below, there's a higher chance, in my opinion, okay, that the market might react positively and we might see some sort of pump. But let's have a look at the print of all the leverage across the market. Like we can see here, where are the shorts? Obviously, on the right-hand side of this line, Bitcoin is currently 27,700. Oh, interesting. A little bit higher than when I started the video. Let's have a look at where's the profile again. So from $100 higher, and you can see that all the shorts with all the volume on the right hand side with all that selling pressure, that is the potential group of people that can get liquidated if the price shoots up to, for example, 27,900, and all that volume there, it will get liquidated. And the same for obviously the longs that are below the price. But where is the biggest chunk of cash to get liquidated for a market maker right now? So I can see from this chart that is above the price, at least the immediate liquidity. So this liquidity, I don't know how old it is. So we're going to look into high block capital in a second. Just for the record, another day we are at altcoin season 4. It's been 6 days in a row with altcoin season. It almost seems like it got broken, because how can it be so many days flat at the same number? But it is what it is. The fear and greed index is printing this channel to the upside. So we could in theory go Now we are at 50 something, 52 today. So we could go even to 40 and stay in this channel to the upside. So that will be positive. Liquidity in the market and not coming anywhere. And the Fed, if you want to know where are they standing right now, they just sold. They sold. Okay, but they're still in this channel to the upside as opposed to the rest of the bear market. So they sold, so they're taking some caution, but they haven't sold out big like they did in the weeks before. So this is kind of slowing down the selling. So that's another way of reading that. That's crucial information that to have at hand. What is the Fed doing? Because they know more information than probably you and me. And alts are, yes, getting slammed. Bitcoin dominance is still in that range where it can break out to massive Bitcoin season. And let's go to what is really important, which is this chart. Let's refresh to get the latest data. How is everybody going? We got Kevin, Corin, Fabrizio, Trader Joe, Maxintech, everybody online. Let's see. Liquidity, as I've been saying from the past 3 months, is to the downside. So why in this other thing we see more to the upside? Because that one is showing the immediate liquidity. This is accumulation of 3 months. So in terms of 3 months, there's a big bucket, but is a little bit further away than the chart that we were seeing of the immediate liquidity. So it's located at 25.4 and 22.6, and there's a big bucket at 31 on the top. But let's look at the 1 month, because that is the one that gets liquidated first, right? It's immediately close to the price, 26.4. And then to the upside doesn't show me much. So maybe I need to see the 7-day to see that we have shorts. This is not showing the shorts. It's interesting. Yeah, very little shorts in high block capital. So let's contrast that to, for example, we have material indicators here. It's showing that there are some orders at 30K, and maybe this is 26, so higher 25, and this is pretty recent, so a few 12.29, so that's less than an hour ago. And here we see the fair value gaps, and many channels in YouTube, I noticed that they are talking about a potential price move to the upside, since there are so many shorts, that this liquidity in green could be taken today, because it's immediately above the price, and it spans from almost where we are, from let's say 27.8 to 28.3. So that is a fair value gap. I think it's on the daily, and it's pretty large. So that's liquidity to be taken. We also have a CME gap at 28.8 to, more or less 28.8. And that got formed a couple of days ago. So potentially, just looking from the point of view of fair value gaps, this could take this liquidity here. Let's draw some speculative lines. This could do this. If the report is bad, it could still bounce, take the liquidity, and then dump. Remember that when there are bad news, many times market maker lets the market go against before doing the final direction. In this type of news, there's usually a manipulative initial move that, let's say, bad news today. So we could pump, take all the green, and then dump to take the orange. And if they're good news, they could manipulate the other way around. So they could let it dump a little bit, let some shorts build up, and then pump the price to the upside. So be careful with the first move. It's not always manipulative. Sometimes it just dumps and it doesn't do any manipulation. But be careful with that volume that is there. Sometimes if you are going to short and you think that the news are negative, sometimes it's not good to short immediately, but to wait for a good entry. So all the shorts getting smashed, and then you enter with that short. Usually that ends up being a better idea than just blindly placing your short anywhere. But I want you to as well be aware that I shared this in the past days. We got this signal. This indicator is called leverage squeeze. It's included in the membership. And I'm also every now and then sharing when we get a signal, because they are not very frequent. And this indicator is based on conditions that are usually the reversals of the market due to too much leverage. And in these areas that you see in green, there was just too many shorts, okay? And not just too many shorts, but too many shorts at the point where the market has slowed down already in terms of volatility. So, for example, there was this big move, there was so many shorts, the shorts are still open, and the market already stopped moving to the downside. Therefore, all that liquidity from shorts ready to get wrecked, late shorts, usually is a good recipe for the market to move back up and punish them all. And we are in that condition. That is true, okay? So don't take it as every signal is perfect, that there is no drawdown, that here we have to go to the upside. But this is a red alert in terms of usually in these conditions, you see what happens. It can take long, but we end up, reversing, and the same for the shorts. I'm going to mention that in the description, you can find links to join TTP. You can get access, for example, to that indicator, along with probably 50 more indicators and tools that you can use with bot trading and different things. And if you use the second link, you can join for free, or you can just get a subscription directly from that link. And instructions are obviously in the description. You're going to find which exchange, for example, we can offer it to you via using OKX. And let's have a look at a few more patterns that are looking a little bit threatening. I'm going to start with the most important because we are 7 minutes away. This rising wedge is extremely important, and I saw it, and then I noticed that everywhere people started noticing too. I cannot think that I came up with the idea. Probably a lot of people are looking at these things, but I remember quite a few weeks ago that I mentioned about this rising wedge, and that every time Bitcoin has a rising wedge like this, it ends up playing out in the sense that you end up coming back to the base of the rising wedge. There is no example I can show you where it hasn't done that. And going there, it will be to go to 20K, okay? And we have broken down, and the RSI has broken down as well from the pattern. So it's significant. Yes, it is significant. Does it have to play out? I don't know. It's got a pretty good chance that at least it's going to reach this level of the 25. So that's totally doable for a reversal. Are we going to get to 20? There's also a likelihood that we can get to 20, because here there is a CME gap as well. So coincidentally, the target of this pattern breaking down is 20. So that it is what it is. Do I believe it's going to happen? I don't know. I'm just showing it to you. You do what you want with that. But there's also this pattern. So this kind of broadening, ascending wedge. I'm not sure if that's the actual proper name for this pattern, but I had it in my channel for a long time. And coming back and retesting this support coincides with an RSI of around 40, let's say 40. I'm going to update this, and I think it's 40. It's already updated. So 40 will be to go to 20K. So if we make the whole move the same way we went all the way to the top of the channel and we revisit the bottom, so that's what normally RSI does. You do this and this and this, and you keep doing an channel to the upside if you are in an uptrend. So you could come back to here and then rebounce to the upside still, as long as you are within this channel. So that I usually look at that together with this, because it's kind of related, the 20K from this pattern with the 20K from this pattern with the CME. And we're 4 minutes away. I'm gonna have to have a tab here with Twitter, I'm assuming that I'm gonna get the CPI data first on Twitter. CPI, let's search for CPI. I'm gonna leave it right next to your comments. If you find it before me, the number goes officially, just make sure that you let me know. Nothing yet, of course, it's early still. Fabrizia, you're commenting on CPR. So CPR or CPI? You mean monthly CPR? Okay. So in terms of CPR monthly, we say this last month. If we are in an uptrend and we don't touch the first resistance during that month, if we don't manage to get to the green line in a month, we usually the next month touch the red line. And we haven't yet, but we are very close. So for a few dollars, we almost did it. Might need CPR when the CPI comes out. Yes, of course, it might dump. This might dump and might go to the second support, which is 25. We have another support at 23. So very interesting that these levels are very similar. So losing 27, then 25, and then 23. And have we ever done the fourth line? I think we did once that we managed to get to the fourth line on the CPR. 1, 2, 3. I don't remember. I think I saw it before, Bitcoin doing something like that. But this month, one thing that you should expect is that this CPR is so narrow. And what do you know about narrow CPRs? It means that it's ready to explode. Okay, so it means that there's been little volatility before, and periods of low volatility are followed by an explosive move. May 2021, probably. Yeah. So May 2021. Okay, let's go to May 2021. Let's see. That's around here. Oh, we touched the third only in May 2021. It was a narrow CPR, so the CPR was so far away that it didn't manage to get to the fourth. Neither there. It's been always maximum the third, but I had the idea that once we reach I think we reach here the fourth resistance. If I edit this, I can put, I think, no, does this support fourth? Monthly? No, it doesn't support monthly fourth, but the fourth must have been around there, so we managed to hit it. Yeah. We are 1 minute away, I guess, from starting this, but I don't know how soon they give the numbers. So I'm going to show you the tab I'm looking at with the CPI. So Let's Talk macro says above 5.5, 25K, 4% probability, 5.3 to 5.5, 26,500. 5252, 28,500, 4749, 29. So this is kind of a bullish expectation because it's meaning that even if you increase CPI, we don't break 25K. So that's bearish, but it's not as bearish as the other patterns I was showing you. That's my point. If we go below 4.5 or lower, 30K, but there's a 1% probability, I don't know, of reaching 30K or 1% probability that we get to 4.5, the CPI. Nothing yet, I guess. 4.9. So let's see what's going on with the price. Okay, almost 28. Let's grab another chart. I need my... Okay, where is this liquidity, the fair value gap? Is it gonna take it? Someone else can confirm the 4.9? That will be lovely to see. 4.9, okay, expected 5. So, and what we were seeing, 4.9, yeah, pretty quick. 4.9, 4.9 everywhere. And I still don't see any big move yet. I mean, we're right below 28. We are right below resistance. And here it is, the CME gap. So it's pretty far away. But sometimes you can get a candle, a god candle to the upside. But this is looking good. Let's do some live TA on a shorter time frame to see if something is breaking out. Yeah, this looks pretty much like a breakout. But remember what I say before starting the stream. So let's look at price first. So yeah, that looks like a breakout. Let's look at RSI. Remember I said that you can have a breakout that is a fake out, right? So the first move after the news can be really, really bad because it ends up going in the opposite direction. So this is a 15-minute breakout on the RSI. Let's look at the 1 hour price. Yeah, yeah, definitely breakout. And RSI as well. Yeah. That's beautiful. Looks, I like seeing green middle fingers in the charts. Don't know why I have the idea that they look like that. 20. Okay, we are getting to the first order block. So this is an order block. You need to identify them because that had a massive move to the downside. So here's the first risk. Here it could sell this way. Probably there's some people taking profits there, and there should be another order block right there. So if we manage to get above this, so some people might want to take half profits there if you're doing leverage or stuff, because it might collapse or it might still go for the next order block. Cool. It looks like it's cooling down there. I wanted to mention as well, in the meantime, so I don't lose you, I want to talk as well about what's going on with the Bitcoin network, because actually I'm a little bit worried about what's going on with Bitcoin right now in terms of fundamentals. There's a new protocol, I don't know how to call it, BRC, as opposed to ERC, which belongs to Ethereum, that is allowing to put second layer on top of Bitcoin, and it's allowing you to do NFTs and do loads of other things on top of the Bitcoin network. If you ask my opinion, I will have preferred that we never got that, although Bitcoin is extremely secure and everything, but I still prefer to keep things separated. So if I'm gonna do layer ones and layer twos, I prefer Ethereum and other networks and Bitcoin store of value. Don't mess up with that, please, because I want the best security for Bitcoin and I don't want to mix pairs with apples. That's me, but I understand if you prefer the security of Bitcoin to do your own NFTs, but this is the price that we are paying for that. With the BRC, people are saying that because of that, we have increased the fees of Bitcoin network to the highest in the last 5.5 years. So I'm going to tell you what is the implications of that on Bitcoin and how are my own chain data charts looking like today, and they're not looking good. So that's why I'm getting worried. Past week, I mentioned those charts and I told you that it wasn't looking good, but if we break certain support on some key data, it can be bad. And we broke it. So I'm going to show you all that in a second. Look at the fees. It's so high and it went higher just too quick. And look at this chart. For example, this one is on-chain data. And we know that this is the activity of the network. It's the number of unique addresses that appear for the first time in a transaction on the native coin in the network. And when we are in a bull market, we hold this MA with short time MA above the long-term MA, and when we break down, we start a bear market. Okay, it's as simple as that. And what did we do around November? We went above, and we started saying in this channel we might go into bull mode. I didn't even believe it. I was constantly looking at this and thinking, I don't know. There's the FTX collapse and blah blah blah. But this managed to hold, and it went high, and it went to 470,000. But look at this move to the downside of the network. And what that means is that the amount of people, the new unique addresses used for the first time, is going down, but heavily, heavily. And that's completely related to these new transactions on BRC that are increasing the fees to even $20 to transact. Even if you want to transact just $10, you pay $21 to move that in the Bitcoin network, and everything is kind of collapsed. They say use the Lightning network, but you still have the fees. So anyways, it's all a confusion right now, and there's a lot of FUD around that as well, that people not being able to withdraw from exchanges that don't support Lightning network and stuff like that. Here you can see the active address sentiment oscillator. We were in this ascending channel, and we just broke out from that. So that means that also from this perspective, the network, we have two perspectives: the number of new addresses used for the first time for a transaction, and we have the active address sentiment oscillator that has also broke down from the channel. We want to stay in that channel. We were coming down as we were in the bear market, and in the bull market, we are supposed to oscillate to the upside in the Bitcoin network. So what are we doing? Breaking down right there? I don't know, but I don't like it. I don't like it. We shouldn't be doing that. Price is going through this liquidity. Just a quick update where we are. My worry was breaking down these levels, this massive vacuum there, coinciding with this fair value gap. That's why when you lose these levels, you cross that like a black hole in the space. It sucks you in and it takes you to the next area of liquidity, because there are no orders there. So it literally just falls until it finds new orders to buy. That's why it moves so quick. So, well, so far we are there, we are holding. The next thing that we need to be looking into is volume. How is the volume? Okay, so we were coming down with the volume. Let's move the price away, and let's put this back here. So volume was higher here. We want a green candle, and hopefully we want a higher candle than this one. So this is the candle, the volume of the selling pressure here. We want to see a buying pressure big. And well, as I say, that is a good moment to take profits. I'm not saying that we cannot cross above, but it should be a little bit harder because it's an order block. Obviously, that sold out, so it can sell out again. And what do we want to see? If we keep going down, we want to hold this and test it as a confirmation for a potential, re-entry of new longs. So new longs are right now looking at the price and thinking, is it going to hold? Because I'm late and I might add to my position, or might enter in a new position. So once it comes to this line, we need to look both things, price and RSI. Is RSI holding that and then building a channel to the upside? Is this holding as a channel like this? Or are we breaking below the usual? We always do the same thing in this channel because it works. That's it. All right. So I think we are not taking this full liquidity, at least not now. It's going to take a little bit longer. And let me see if there's something else I wanted to mention to you today that is really important. Ouch, this doesn't look good. So this pattern here is extremely important, and I really want the price to be above this line, and that's my only wish for today. And the reason is because this has been a line of resistance and support since October. Okay, so don't underestimate this line, because you shouldn't. And my biggest worry in this pattern is that currently the price looks like is retesting this as resistance from head and shoulders. Okay, we want to cross this, like, hopefully very quickly, and we want that volume to cross it and to retest it and then carry on to the upside. If this thing rejects us here and we do a lower low from this level, which is 27.6, that will confirm, a lower low closing candle here will confirm that we have broken down of the head and shoulders, and the target, which I measure very poorly here. So I put this from the top wick like that, and I move it to here, and it's pointing to what? To 24 and 100. So keep an eye on this chart. How can you do this chart? Very simple. Just connect these lines all the way up. Keep your head and shoulders there, and touch this bottom there as well. And let's make sure that we cross above 27, 20. Let's do 28, and let's hold about 28, please. That would be lovely. Below 28, really bad for this pattern. Okay, there are many other patterns and they compete with each other, but I think the head and shoulders became really popular in social network, along with this pattern here. Where is it? This one. So these two patterns are being observed by a lot of people, but this retest is a little bit higher than the other one. So this retest will be like something until there. If we don't cross above 29, in this case, we are still breaking down and with those targets in place. The other pattern is a little bit less dramatic. This can go to 20, this pattern. All right, so I think that's pretty much it for today. Let's cover this as well. On the daily RSI, this needs to go back above because we have a fake out. Remember, I post this breakout. I posted it, and I was saying how high are we gonna go and blah blah blah, and it was a fake out. It took us back below the pattern. And can you have two fake outs in a row? It has happened. Yeah, you have first one fake out, and then you have another fake out here, and then you end up going to the upside. So sometimes when there are news and events and stuff like that, it spoils completely the pattern, and then you get two fake outs. But in order for us to be back on track, to call this a fake out to the downside, we need the RSI on the daily to go back above this and hold there. And then you say, okay, fair enough. That breakdown was just a crappy situation. But once we are above this line, you say, well, we are back in track and we're still building a channel potentially to the upside. That level is, let's say, 48 RSI. Let's say that. Let's calculate that, how much it is. Reverse RSI, and we say 48, right? 48. Okay, so for 48, we need the price to hold about 28,200. 28,200 will mean that this RSI will close about 48, the daily. And or you can just put this line in the daily RSI and wait until the line is above there. That will mean that this was pretty much with high likelihood a fake out. All right, guys, I hope you enjoy the live stream. I hope this was useful for you. Let's see how we're doing. Oh my god, it's breaking out. Is it? Don't know, but the RSI looks pretty good. this move to the upside is it's like a not God candle, but God RSI move. A move from pretty much 43 to almost 70 in the RSI. Really good, but it's struggling to cross. We'll see. We'll see in the next candle. This is just a 1 hour candle. Lovely. All right, guys. Thank you so much. I hope you appreciated the coverage of the live stream. And yeah, thank you so much. I'll see you in the next one. Bye bye.